Hello everyone. Shivananda Sharma Memorial RV College Video Lectures and ISR Initiative. SSMRV College, one of the premier institutions run by the prestigious RV Group of Institution, has come up with a unique initiative to engage the students at the time of this unforeseen medical emergency caused by corona outbreak. As a socially responsible institution, we would like to connect academically with students to make good the losses caused. In this connection, I, Vijayalakshmi R of Department of Commerce BCom program has posted a video on the subject business taxation, and the topic covered is from the Unit 3 Assessment of Firms. We are going to solve the problem under calculation of book profit. Please watch the video till the end, like, share with your peer groups and subscribe to our YouTube channel. Thank you. As we discussed earlier, taxation of the profit partnership firm. So when it comes to your partnership firm, whether it is a registered firm or an unregistered firm, both are subjected to payment of tax. So in this chapter, we are going to calculate the total income earned by a partnership firm for a tax purpose. In that, the first we need to recognize, so what are all the admissible expenses and inadmissible expenses? That is the first type of problem what we have covered in the previous slides. So and the second type of problem is covered in this PPT. The second type of problem is calculation of book profit. So calculation of book profit, here we are given with the format. So we need to remember this format so as to find out the book profit, and we need to remember what are the items to be added and what are the items to be deducted. Students, you can see there are 5 items to be added to the net profit, and there are 3 items which should be deducted from the net profit. So let us understand the format like this. First, we need to record the profit and loss figure, whether it could be a net profit or it could be a net loss. First, we have to record the net profit of a business or a net loss of a business, and for which we need to add inadmissible items or non-business expenses debited to P&L account. Inadmissible or non-business expenses is the first item to be added. Second thing is business income not credited to P&L account should be added. Overvaluation of opening stock, if it is there, we should add. And if there is undervaluation of closing stock, we need to add it. Remuneration to the partners debited to partners account should be added. And next thing is disallowance of interest on capital in excess of 12% per annum. Disallowance of interest on capital in excess of 12% per annum. That means up to 12% we need not take. If the interest on capital is paid beyond 12%, that amount need to be added to the net profit. Next thing is the 3 items what we are supposed to deduct is admissible expenses or a business expenses which are not debited to P&L account, undervaluation of opening stock and overvaluation of closing stock we need to take. Then income from all other heads credited to P&L account should be deducted. These are the 3 items which need to be deducted. So students, do remember, for a net profit there are 5 items to be added and the 3 items to be deducted. So whatever the items given in the problem, according to which we should solve the problem and find out the book profit. Now let's go for the problems. Question 1. Here let us start with the simple problem. This problem tells you about how we are going to calculate the admissible remuneration of a partner. That means, so in the previous slide you have seen that for a net profit we are going to add the remuneration of the partners. So what is the remuneration and what amount of remuneration is exempted for the tax payment, or what are the items that you can show it as a deduction so as to find out the business income. Okay, let us go through the problem once. The book profit of the firm is rupees 50,000 and the remuneration of the partners is rupees 80,000. Compute the admissible amount of remuneration to the partners. Here you are given with the book profit 50,000 and remuneration paid to the partners is 80,000. you need to find out what is an admissible amount of remuneration. That is, what is an exemption that can be claimed by the partners. Okay. So in the previous slides, we have discussed about how to find out the admissible remuneration. So students, let us remember like this. So we will be calculating the book profit. Whatever the total amount of book profit we are going to get, in that up to rupees 3 lakh, out of the total book profit up to rupees 3 lakh, we need to take 90%. Up to rupees 3 lakh, 90%, and whatever the remaining book profit, for which we are going to take 60%. 90% for 3 lakh, and apart from that 3 lakh, if we have excess of book profit than 3 lakh, for the remaining amount 60% will be taken, and that amount will be totaled. Whatever the total amount that you are going to get will be compared with the standard, that is rupees 1,50,000. So the standard amount or the calculated amount, whichever is a high, will be considered. So that amount is again compared with the actual remuneration, and whichever is less will be the admissible amount of profit. Okay. So in this problem, we are given with the book profit of 50,000. Students, we can see that the book profit is less than 3 lakh. So you need not go for the slab. You can directly do the problem. So since it is less than 3 lakh, so we can compute the admissible remuneration to the partners like this. 90% of 50,000 will be 90% of 50,000 will be 45,450. So 45,450 or rupees 1,50,000, whichever is a high will be considered. That is 1,50,000 is high, that amount will be taken. Again, that 1,50,000 or the actual remuneration, whichever is less, that will be considered. So 1,50,000 or the actual remuneration is rupees 80,000. The lesser amount is 80,000. Therefore, admissible remuneration is rupees 80,000. Let us go for the next problem. Question number 2. Calculate the allowable remuneration to the working partners. Net profit as per P&L account is rupees 1,35,000 after debiting the following items. So here the net profit is 1,35,000 and you are given with certain other items which are taken on the debit side of P&L account. Salary to the partners is 1,25,000. Commission to the partners is 1 lakh. Bonus to the partners is 25,000. So we have discussed already that book profit, whatever the net profit we are going to get, for which we are going to add the remuneration paid to the partners. It is an item to be added. Let us remember that. So let us start the problem like this. Let us find out what is the actual remuneration totally partner is going to receive. Here in this problem we can see that partner is receiving in the form of salary, he is receiving a commission, he is receiving a bonus. Let us add all these three, that is 1,25,000 plus 1 lakh plus 25,000. Totally remuneration, actual remuneration paid to the partners is 2,50,000. Okay. In the next step, let us record the actual profit. The net profit given in the problem is 1,35,000, for which we are going to add the remuneration paid to the partners in the form of salary, commission and bonus. All these three will be added to the net profit given, 1,35,000 plus 1,25,000 plus 1 lakh plus 25,000. Totally the book profit is going to be 3,85,000. So you can see here book profit is 3,85,000. We have discussed earlier, we need to apply the slab now. So since it is more than 3 lakh. So we remember that up to rupees 3 lakh we need to consider 90%. So here I have written the same thing, 90% of the book profit up to rupees 3 lakh or rupees 1,50,000, whichever is high. So 3 lakh into 90% will be 2,70,000, which will be compared with the standard amount. This 1,50,000 is a standard amount. So the standard amount or the calculated amount, whichever is a high, will be taken. That is 2,70,000 will be taken. And apart from 3 lakh, we have a book profit of 85,000 because total book profit is 3,85,000. So 85,000, we are supposed to take 60% of it, which comes to 51,000. So 2,70,000 plus 51,000 will be 3,21,000. So that is the total amount what we have calculated as per the slab. So 3,21,000 or the actual remuneration, whichever is less. 3,21,000 or the actual remuneration, whichever is less. So 3,21,000 is compared with the actual remuneration. Actual remuneration is 2,50,000. We have calculated in the first line. You can see that 3,21,000 or 2,50,000, whichever is less, will be taken into consideration. Therefore, the allowable remuneration to the partners or admissible remuneration to the partners is 2,50,000. Let us recall once again. So whatever the book profit we are going to get, in that up to rupees 3 lakh, 90% will be taken, and for the remaining 60% will be taken. The total amount will be compared with the standard amount. If standard amount is a higher or the total amount is higher, whichever is higher will be taken. That higher amount is compared with the actual remuneration. The amount whichever is less will be considered as a admissible remuneration. Let us go to the next type of problem. So from here onwards, we are going to find out how we are going to calculate the book profit. Okay. So let me read out the question. P, Q and R are the partners in the firm sharing profit and loss equally. For the year ending 31st March 2019, the firm's net profit is 5 lakh after debiting the following items. So net profit is given as rupees 5 lakh. So debit side items given is salary to Q. Partner Q is rupees 50,000. Commission to P is rupees 20,000. Bonus to R is rupees 10,000. Donation to NDF rupees 30,000. The above net profit rupees 5 lakh also includes rupees 20,000 interest on government securities and rupees 10,000 dividend from Indian company. Compute the remuneration payable to partners and firm's business income for the previous year. This is the question asked for you. So we are going to calculate the book profit here. Students, please do remember, first we need to take the net profit, for which we are going to add all inadmissible items. So here inadmissible items are salary paid to Q, commission to P, bonus to R, donation to NDF. All these items should be added to net profit. And the items which need to be deducted are the interest on government securities, 20,000 what we are receiving, and 10,000 dividend what we are receiving. The income from other source should be deducted. So from 5 lakh we are going to deduct these two items, and the adjustment items 1, 2, 3, 4 is going to be added. Let us see the solution. See here, in this solution, the net profit as per P&L account 5 lakh is taken, for which we are going to add the salary paid to Mr. Q 50,000, commission paid to Mr. P 20,000, bonus paid to Mr. R 10,000, donation to NDF. All these adjustment items, 4 items is added to net profit. Totally we are going to get 6,10,000, from which we are going to deduct the income from other sources, that is tax free and other income credited to P&L account. One is interest on government securities 20,000, dividend from Indian company 10,000. These two are the items which we are receiving, that should be deducted from net profit. So 30,000 is deducted. Totally book profit what we are going to get is 5,80,000. Now please do remember to apply the slab what we have discussed already. So up to rupees 3 lakh, 90% will be considered. For the remaining 2,80,000 we are going to consider 60%. So here is a calculation made for you. Calculation of allowable remuneration to the working partners. So up to rupees 3 lakh we are considering 90%, which comes to 2,70,000. For the remaining book profit of 2,80,000. Students, see here book profit totally is 5,80,000, for which out of which up to 3 lakh 90% is taken. For the remaining 2,80,000 we are considering 60%. It is a slab which is given by the tax board. So 60%, which we are going to get 1,68,000. Put together total is 4,38,000. That 4,38,000 or the maximum limit 1,50,000, whichever is a high will be considered. So out of 4,38,000 and 1,50,000, 4,38,000 is high, that will be taken, and which is compared with the actual remuneration. Actual remuneration paid to the partners is 80,000, which is given in the problem. So yeah, 4,38,000 or 80,000, whichever is less will be the allowable remuneration. So among 4,38,000 and 80,000, 80,000 is less. Therefore, admissible remuneration or allowable remuneration is 80,000. Next, go to the next problem. Ram, Shyam and Kishore are the partners of a firm with equal share. The profit and loss account for the year ended 31st March 2019 shows a net profit of rupees 1 lakh after debiting the following items. So these are the items given in the problem. First we have salary to Ram rupees 20,000 and salary to Shyam rupees 15,000. Bonus to Kishore 15,000. Interest on capital to Ram rupees 2,000, which is in excess of specified limit. Excess of specified limit tells you that the interest paid more than 12% per annum. So 12% is the maximum limit. Beyond that they are paying the interest. Okay. Next is rupees 20,000 paid for the rent of a business premises. Apart from that, we have commission of rupees 5,000 was given to Kishore. Compute book profit and total income of the firm, assuming all the partners are working partners. Okay, here we need to understand for a net profit what are the items to be added and what are the items to be deducted. Let us go through the items given one by one. First we have a salary paid to Ram and salary paid to Shyam. Yes, remuneration paid to partner should be added. Salary to Ram should be added to net profit. Salary to Shyam should be added to net profit. Bonus to Kishore should be added. Interest on capital to Ram should be added. And next is we have 20,000 paid as a business rent for the business premises, which should not be taken. Next we have commission of rupees 5,000 given to Kishore, which should be added. Let us go to the solution now. Here is the solution. So the net profit given 1 lakh rupees is taken here, for which we are going to add the inadmissible expenses, that is salary to Ram 20,000, salary to Shyam 15,000, bonus to Kishore 15,000, interest on capital which is paid in excess of the limit specified 2,000, and commission to Kishore 5,000. Totally these are the items which you are going to add, which comes to 57,000. Total book profit is 1,57,000. Now you need to remember the slab. So the book profit is below 3 lakh. So you need to take 1,57,000 into 90%. Here it is given for you. Admissible remuneration to the workers, 90% of 1,57,000 comes to 1,41,300. So that 1,41,300 is compared with the maximum limit, that is 1,50,000. So out of these two, whichever is high, 1,41,300 or 1,50,000, whichever is high will be taken. That whichever is high means here we are going to get 1,50,000. That 1,50,000 is compared with the actual remuneration paid to the partners. Actual remuneration paid to the partners are nothing but salary paid to Ram, salary paid to Shyam, bonus to Kishore, commission to Kishore. Okay, these are the items which will be taken. I repeat, salary to Ram, salary to Shyam, bonus to Kishore, commission to Kishore. All these items will be taken into consideration, which comes to around 55,000. So 1,50,000 or 55,000, whichever is the less will be considered for admissible remuneration. Please do remember, out of book profit, admissible remuneration will be deducted so as to get the income of a firm. Book profit is 1,57,000 and admissible remuneration is 55,000. Out of 1,57,000, we should deduct 55,000 so that we will get income of a firm. Here is the next problem for you, which is the speciality of this problem is we have two additional items. One is a undervaluation of opening stock. The other one is undervaluation of closing stock. As usual, you will be given with the P&L account from which you have opening stocks, salary to staff, salary of A and B, provision for bad debts, income tax, net profit. Credit side, you have closing stock, interest on government securities, rent from house property. So additional information need to be given with the prior importance. First we have undervaluation of opening stock, which is 20%. Next we have undervaluation of closing stock, which is 10%. Salary to staff includes a salary of 20,000 of A's son, who is a BCom student. So here salary paid to A's son rupees 20,000 is given. It is a non-business expenses which need to be added, who casually helps the business, and rupees 4,000 for general reserve. General reserve need to be added to net profit. Interest on capital, which is given at A is 30,000, B is 20,000, which is 15% per annum. Interest is paid at 15% per annum. So we all know that interest standard amount is 12%. If it is paid beyond that, yes, we need to deduct the excess amount what we have calculated. Okay, let us see how it is going to be treated. You are required to compute the book profit of a firm in the assessment year 2019-20. Here is a solution for you. So first you need to record the net profit 35,000, for which you are going to add the inadmissible items. Salary paid to Mr. A and B, 60,000 should be taken. Here is the interest calculation shown for you. So interest paid is 15% per annum, but in excess of 12% should be added to net profit. So out of 30,000, 12 divided by 15, that is up to 12% is an exemption. Beyond that we have paid 3% extra. Therefore 30,000 into 12 divided by 15 is 24,000. So 30,000 minus 24,000, 6,000 will be taken. Again for 20,000, 12% divided by 15% is equal to 16,000. Difference between 20,000 and 16,000 will be taken, which comes to 4,000. Income tax, so paid income tax given on the debit side 17,500. Provision for bad debts 17,500 will be taken here. Salary paid to son 20,000 is taken here. And apart from that, transfer to general reserve we have 4,000, that should be taken here. So again, undervaluation of closing stock. Here comes the undervaluation of closing stock calculation. It is clearly given in the problem. The closing stock is undervalued by 10%. 10% means, so instead of showing it at 100%, they are showing it at 90%. Okay. So the calculation goes like this: 1,70,000 into 100 by 90, because it is shown at 90%. 1,70,000 into 100 by 90. We are going to get around 1,88,888. It is in fractions. The difference between 1,70,000 and 1,88,888 becomes 18,888. That is the amount which is going to be recorded here. What is the actual undervalued amount will be taken here. Okay. So net profit will be added with these items. Totally we are going to get 1,82,888, from which we are going to deduct the inadmissible items. In inadmissible items we have undervaluation of opening stock, interest on securities received, rent from house property received. These are the income received. So undervaluation of opening stock. So again the calculation goes like this. In the problem it is clearly given as stock is undervalued by 20%. Opening stock is undervalued by 20%. Therefore amount into 100 by 80. Why 80? Because it is undervalued by 20%. So 80,000 into 100 divided by 80. So that amount will be taken. That is, it comes to 1 lakh. And the difference between 1 lakh and 80,000 is 20,000. That amount will be recorded. Interest on securities will be taken and rent from house property will be taken. All these put together comes to 1,20,000, which should be deducted from 1,82,888. So finally you are going to get a book profit of 62,800. We have the other problem for you. XYZ are the partners in a firm. The firm has incurred a net loss of rupees 1,50,000. Here again you are given with the net loss, which should be in a minus figure. So you are given with the certain items as per the previous year 2018-19, in which we have interest on capital at 20%. Please do remember, interest on capital is 20%. That is interest amount into 12 divided by 20 we should take. In the earlier problem we have taken it as interest amount into 12 by 15. Now we need to take it at interest amount into 12 by 20. Okay. So here the interest paid to X is 8,000, Y is 7,000, Z is 9,000. Salary or remuneration paid to X is 50,000, Y is 35,000, Z is 35,000. Bonus is for X 20,000, Y is 15,000. Commission paid to Z is 15,000. Donation to Prime Minister Drought Relief Fund 15,000. Depreciation on asset. Here again you are given with the two items. Depreciation on asset means what you have taken in a P&L account 40,000. Allowed by the tax department is 60,000. This what you have taken 40,000 should be added to net profit, and allowed by tax department should be deducted. Okay, next is a income tax 15,000, sales tax 20,000, general reserve 40,000. And apart from that, in a P&L account there are certain items which are given. Capital gain, long-term capital gain, short-term capital gain, and the export earnings. So in this, let us remember what are the items to be added and what are the items not to be taken and what are the items to be deducted. So let me tell you. First, you are given with the interest on capital, which need to be applied with the slab, that is more than 12% should be taken. So interest should be taken. Next is a salary. Salary should be taken. Bonus should be added to the net profit. Commission should be added to the net profit. Next, donation to the Prime Minister Drought Relief Fund should be added to the net profit. Depreciation 40,000 should be added and a 60,000 should be shown as a deduction. Income tax should be added. Sales tax should not be taken. General reserve should be added to the net profit. And the capital gain in terms of long-term, short-term and export earning should not be taken. It should not be taken. So let us go for the problem. Solution is given a bit here. We need to record the net loss of 1,50,000. Please do remember it is in a minus figure which need to be deducted. Next we are seeing here inadmissible items. In that, interest on capital in excess of 12% is taken. 8,000 into 12 by 20, which comes to 4,800. 8,000 minus 4,800 is 3,200. Next, interest paid to Y. 7,000 into 12 by 20, which comes to 4,200. 7,000 minus 4,200 is 2,800. Next, interest paid to Z. 9,000 into 12 by 20, so which comes to 5,400, and the difference between 9,000 and 5,400 is 3,600. Remuneration paid to XYZ is shown here, 50,000, 35 and 35. Bonus paid to X and Y is taken, 20,000 and 15,000. Commission to Z is taken, which comes to 15,000. Donation to Prime Minister Relief Fund 15,000 is taken. Depreciation, that is a beginning amount what you have recorded in P&L account, is shown as an addition 40,000. Income tax 15,000 is taken here. General reserve 40,000 is taken here. Put together total you are going to get 2,30,000. So here we have 2,30,000 and we need to remember there is a loss of 1,50,000. So 2,30,000 minus 1,50,000 will be 80,000, from which the depreciation allowed by the tax department 60,000 to be deducted. Therefore, the book profit will be 20,000. You are given with the next problem here. We have P&L account given. So in that we have cost of goods sold, remuneration to partners, remuneration per partners we need to take it, interest to partners at 12% per annum. It is exactly 12% per annum. So we need not consider. If anything paid in excess, we should take it. Municipal tax of house property, yes, we have to take it. Other expenses, so let us see if there is any adjustment we need to consider. Net profit, obviously it is a first item. Credit side we have a sales, rent of house property and dividend. These are the incomes received which should be deducted. Rent of house property and dividend are the incomes which should be deducted. Okay. Other information given in the problem, out of the other expenses, rupees 18,400 is not deductible under section 36, 37 subsection 1 and 43 subsection B. Therefore, 18,400 is other expenses which should be added to the net profit. That means this is a inadmissible expenses which should be added to the net profit. And the next adjustment given is on 15/1/2019, the firm pays on outstanding sales tax liability of rupees 54,700 of the previous year 2017-18. This amount pertains to the previous year 2017-18. It has not been debited to aforesaid P&L account. So here we need to remember it is not being debited. So here there is an expenses which is not debited to the P&L account. Therefore, please to remember this should be shown as a deduction. This 54,700, since it is not taken in P&L account, it should be shown as a deduction. It should be deduct. Here is the solution for you. Net profit given in the problem is 2,80,000, for which we are going to add remuneration to the partners, municipal tax of the house property, other expenses 18,400 which is there in adjustment. These three items will be added. Totally we are going to get an amount of 4,72,400, from which we need to deduct the two items of income, that is rent received and dividend received. Rent received is 60,000, dividend received is 1,70,000. Totally out of 4,72,400, 2,30,000 is deducted. We are going to get 2,42,400. Let us remember sales tax which is not debited to P&L account. That amount need to be deducted now. So 54,700 will be deducted. Finally, book profit is going to be 1,87,700. Students, hope you have understood the previous explained problems. Here are three problems which are given for your reference. So just go through the problem, try to solve the problem. If there is any doubts, you can contact me. And these are the problems which need to be recorded, which need to be written in your notebook. Try to solve these problems. Thanks for watching the video.